Did you know that 1 in every 4 home contracts are delayed? Today's video, I'm going to give you the 9 things that can screw up your closing or delay your closing. You may be pre-approved, but that does not mean that your mortgage loan is a done deal. We still have like 20 to 30 days to go before you close. So let's talk today about the 9 things that can derail your closing. Now, 73% of home transactions close on time, just like they're supposed to. But there's that other 27% that doesn't. 5% get denied all out for financing. So they, unfortunately, don't get a house. Now, the other 22%, however, are delayed. And they're delayed for a variety of reasons. It could be appraisal issues. It could be funding issues, meaning I don't have the money yet in my bank account. It could be credit issues. There's so many different things that can go on and go wrong during the home loan process. So let's prevent the forest fires because it's way easier to prevent them than it is to put them out. Number 1, do not make big purchases during your process. Big purchases could eliminate cash in your bank account. Obviously, if you go buy a refrigerator, guess what? Less money in the bank account. And sometimes those reserves are needed for your home loan. So don't go buy something big before you close. The second tip is don't quit your job. Don't reduce your hours. Don't change anything about your employment unless you have a very specific conversation with your loan officer before you do so. I always tell my clients, hey, if you're going to go get a better job and it's going to pay you more, let's talk before you give notice because it may still be a problem, depending on the type of income that you have. However, most of the time, most of us would say, don't do it until after you've closed. One of the important factors with home loans to be able to prove that you can repay your loan is job and income stability. And this is why we generally tell you, just don't do it till you close. Third tip, do not close your accounts like your credit cards, your loans. Better yet, don't open any. During the mortgage process, you don't want to do this because it can drop your credit scores down. More importantly, though, it adds debt if you're adding new loans, which affects your debt to income ratio. Just don't do it. Number 4, sounds pretty obvious to me, but don't pay your bills late during this process. Paying your bills late drops your credit scores, and it is very important that the underwriter not see that you're late on anything. 5th tip, don't ignore me. If you get a call from your loan officer or the loan officer assistant or the processor or an email or a text, respond to it in a timely fashion. If we don't hear from you, we think something's wrong or we don't know what's going on. There's no way we can read your mind. We need to stay in communication with you. It's extremely important. And if you're ignoring our request for information or documentation, it can delay your process or derail it completely, depending on what the documentation is. And sellers don't want to wait on you. So they have a contract closing date. They don't want you to be late. So the longer you wait to get documentation that's needed, the longer your closing could be extended out. So don't delay, get that documentation in or answer those questions as quickly as you can. 6, do not let anybody check your credit. It's very, very important that no one checks your credit. Trust me when I say the sofa will be there when you want to buy it. The car will be there when you're ready to buy it. There's so many opportunities where if you give out your social, they're going to run your credit. You do not need 10% off at Ross or TJ Maxx or Ulta, I promise you. You can do without the 10% right now. Or you can wait to buy that until after you've closed on your home. The bottom line is no new debt. Do not let anybody check your credit. Even if you think you're just doing it to maybe see if you can get approved, it could be a problem. No cash deposits, no large deposits that are undocumented. Undocumented cash deposits, large deposits, things like that can definitely have an issue on your ability to close. Funds, when it comes to money going into your bank account, have to be sourced and seasoned. It's very, very important that we know where your funds to close are coming from, whether it's a gift, coming from your 401k, coming from an investment account, coming from whatever. We need to know. And cash on hand, 99% of the time, is almost never possible to get it approved. So we got to talk that through and make sure you're not going to cause yourself a problem to get closed. 8, don't change your bank accounts in the middle of your mortgage process. Talk about making so much extra work for you because you have to document everything. Paper trails in mortgages is everything. Being able to see where the money was, where the money is, and everything in between is incredibly important. Do not change your bank account. Just get mad at the bank later. Take a deep breath. Everything will be fine. Go change your bank account after we close. And number 9, don't take out a cosign loan for a friend or family member. Don't do anything like that that's going to cause a problem. I literally had a client the other day call me up and say, I'm getting ready to go cosign for an apartment for my sister. And I said, absolutely not. Now is not the time. Cosigning in the middle of a mortgage process means you just added $800 a month or something like that to your debt to income ratio, and it could completely cause your loan to get denied. Whatever you do, do not cosign for anybody during the mortgage process. It's just another debt. Now, what should you do? Well, first of all, communicate. If you haven't heard from your lender in a few days, just reach out. Hey, what's up? Usually there's a lag time, meaning that from the time your application is received, appraisal's on order, title's on order, loan is submitted to underwriting, there's gonna be a few days of silence. Why is this? Because nothing is happening within your loan officer or processor's hands. They're waiting on other people, other third parties to do their part. So maybe we're waiting on the appraisal to come in and there's not really much to say. But if you're wondering what the heck is going on, reach out. We'll let you know. And most of us use an app, which also gives you status. So that's really helpful. You can just log in really quick and see what's going on. And another thing, relax. I know this is high anxiety. This is probably the largest debt of your life. I get it. I've had mortgages myself too. I still have one, unfortunately. But the bottom line is, it's a process. This isn't like buying a car. This isn't a 5-hour process at the dealership. This is a process. There's a lot of different factors involved when it comes to a mortgage. There's a lot of different people involved when it comes with a mortgage and all of the different steps and phases, from the inspector, the appraiser, the insurance company, the title company, the escrow assistant, me, my assistant, the underwriter, the processor, the closer. There's more than 10 people involved in your transaction. So there's a lot goes on. So just take a deep breath, communicate again, stay involved, stay in the loop, and we'll make sure that everything goes all right. I always tell my clients, if you're feeling that little feeling in your stomach, like maybe I should ask Erika, you probably should. So stay in communication with your loan officer, ask questions. If they sound annoyed, let them know, hey, remember, this is my first house, or hey, I haven't done this in 20 years. Give me a little break, please. That'll probably set them straight. The bottom line is you gotta communicate. You gotta keep questions asked. Get us the docs we need in a timely fashion, and we'll do the same because we want your loan closed just like you do.